Hello traders at CMC Markets. This is Trevor Neil of RRG Research. I'm recording this weekly update on Friday 26th of January. I'm going to start today by looking at the asset classes. Then we're going to go to the stock market, look at the US market and see what the message is there, and also have a look at Europe as well. And then a couple of individual stocks, plus crude oil, which has made a big break and out of its triangle, and poor old gold. Now, first looking at the relative rotation graph. This is with a sampling of a weekly sampling, so a long-term picture of the asset classes. And we're looking, let's put your eyes on things which are heading southwest, which is the wrong way. West is decreasing relative performance versus the MSCI World Index, and things which are heading easterly or northeasterly. So let's look at the bad at the moment. So we've got commodities as underperforming and as a sector, and pressed by quite a lot of bear markets in the whole complex there. We've got all the interest rate ETFs also pointing southwesterly or westerly and in the lagging quadrant in a poor positions. The emerging markets also heading, if you like, in the wrong direction, too early to participate in that. Gold, which we're going to look at here, at its move from the promising breakup that we had down and is over the last month. It has deteriorated and it's now in the lagging quadrant and heading the wrong way, losing positive momentum and losing relative momentum, relative performance as well. We've got the S&P itself pretty close to the MSCI World, stuck there. It's often the case that the S&P, because it's such a large constituent of the MSCI World, it does actually move with it, correlate with it. But we've got two other things to observe. The small caps coming round here, interestingly, from the improving into the leading quadrant and heading decisively easterly. And then what we've got is very dominant message over furthest on the right by a long way is the QQQ, in other words, the tech stocks. The message remains tech stocks have resurged and are in the lead. We've got the bonds going the wrong way, becoming more unattractive. The commodity index is a basket case, and Europe, I should have mentioned, has flipped around in the improving quadrant. It has showed some sign of promise some time ago, but it's faltered. And I think the big lag there is the FTSE. Now looking at the RRG of major stock indexes, again, this is a weekly sampling of it. You can see clearly over on the left-hand side, we've got the perennial poor child, which is the Hang Seng. I've got the Shanghai Composite. I put this on here now because this also has been in a long-term downtrend, but I think it's beginning to test the downtrend. So I'm keeping my eye on it. It is curving up a bit. Very early to get involved in that on a relative basis to the MSCI World, which is in the middle here. We've got some sort of dissipation of the European stocks. So here's the CAC, which is in the lagging quadrant. The DAX, which is highest up of the securities, best RS momentum, but just failing to move into the leading quadrant. We'll look at that chart shortly. The stocks index itself, so Europe generally moving back into the lagging quadrant, but the big drag there in Europe is the FTSE. We've got the Nasdaq pointing in the right direction, heading probably back into the leading quadrant again, led by the tech stocks, using the FANG or the Magnificent Seven for that. Furthest to the right, pointing, the only thing here really apart from the Nasdaq that is actually pointing northeasterly, a strong message, long tail, resurgence of power in that group there, but there's an exception there, isn't there? And so we'll have a look at that as well. And as I said before, we'll look at gold and Brent crude oil. Now the Nasdaq broke up through its high as we expected it to do. We were encouraged particularly by the RSI. Here we had this downtrend line, that break there. This is where we saw this as a buy opportunity with the stop below here. Since then we hesitated at the previous high, and then we broke through it and powered away. The same story here on the S&P. We saw this dip as an opportunity. I'll come back to that in a second, but we've gone up, tested the high, pulled back. This candle here was very indicative that we might have completed that too, and then we broke into the high and we're on our way up with good momentum, widening gap on the MACD. Yes, the MACD crossed up in here, but we were talking about the downtrend line on the RSI, high, higher high, lower high, suggested when the line was broken that this would be the buy point. That was there. Using the same reasoning in the DAX, we see this as a bull market. We see this pause here as a pause, and that we are going to go through that 17,000 level. And like the Nasdaq and the S&P, we've got early signals. I think the lagging MACD is already crossed, although we haven't made a new high, and the gap is widening there. But this is the one which we had been talking about previously. It's the downtrend in the RSI. When that breaks, that will be the trigger to buy. That was in here, back in here, in the consolidation itself. So if you caught that one, that's fantastic. Your initial stop was here. Now we're pushing towards the high. I think once it breaks the high, it could gap higher on that. But the call is that this high will be broken. And if you follow this type of trading, when the momentum is lost, the downside momentum is lost in the consolidation, we start to build upside momentum in the consolidation. It's an indication that this attempt will be successful. It's an indication of that, and like the Nasdaq and the S&P, hopefully you can be on the right side of a move prior to the breakout, when it's obvious to everybody that it's at new highs and going up. Now here's the Magnificent Seven, and we've got a very strong message here, haven't we? Got far to the right, we've got Nvidia, a little bit curving around there. So it's daily sampling of that, and then far to the left and heading strongly southwest with a good sized tail is Tesla, and that is really beginning to look quite terrible. Good direction also from Apple as well. I would say also in the FANG Plus AMD, excellent as well. Here's the ugly duckling, Tesla. Once the favourite, but now it's dawning on people that just a lot of premium is attached to the personality, not to the worth of the company. And whether that is now unstable and worth anything is what the price is actually telling us. So we've got lower highs. I've just stretched this out here, this picture back from 21 top, high, lower high. We're going down. We've just broken a significant support level. Here now, the next support level, significant support level, is from April last year, and that is here, and it's extending that over there now, and that looks as though it's where we're heading. That's 152, just above 150. Then we probably back to below 100. The MACD has turned decidedly down, and then we just had results, and it has gapped. Let's zoom in a little bit now. Tesla topped out at the end of last year, and the MACD turned down here. Now you can see it's been down ever since, and now accelerating on the downside with this gap through this support point. That's the sort of horrible thing about support points being tested at results time. The RSI on it looking terrible. A reading here of a very low number. This is a 7-period RSI. You don't often see that, 6. So you can say that's deeply oversold, but it's at 6 and pointing downwards, not rallying from 6. It is pointing downwards. So momentum is increasing on the downside, despite this extremely overextended condition. I think if it rallies, it will be to this low here. And the perennial favourite, Nvidia, soaring ahead now, above 600 now. The break at 500, cleared that. We've got good signals there from the MACD at the time, the crossover here, and since then it's been positive, and the gap is widening. The momentum is increasing on Nvidia on the upside. We saw this crossover of the declining highs here. You had the same highs here. We drew this line in here. Breaking of that was the signal. That was actually on that bar there that it happened. And so on the breakout, we definitely wanted to go with it. Now, as it's gone up since, we've had no pullback in it at all. Pretty well every day has been higher than the day prior. Just a little look at Google, Alphabet, which you saw that position on the RRG chart. It's moving up. It's going more parabolic in its shape. The gap here on the MACD is widening, so it's gaining momentum. The RSI also pointing up. But I just want to remind you the position it's in. It's very close to its all-time highs here. So we're testing that level there, 150 to make it a round number. But the 2021 highs are being tested. The momentum is increasing. That means it's likely to be a successful break to the upside. Now, Brent crude oil changing direction, I think, since the September top at $95, coming down here to 67, and then we formed this triangle. We've broken out the triangle, and we've now got supported by the demand in this uptrend line here, which is sitting at 71, also from the downtrend line here at 74. We push through these resistance levels here with ease. The next resistance is 79.30, but I think this is a bottom. I think this is actually a reverse head and shoulders. So low, lower, low, lower, low. That's a left shoulder, head, right shoulder. If that is the case, and I'll just draw in the line here, we measure the neckline would be this line here. I wanted to draw it so you could see it. Left shoulder, high in between head, high in between to right shoulder. That's the measurement. That's from 68, we'll call it, to 8. We'll call it, so that's $10 from the break point, which is 73, will take us up to 83 on this run here, which would also be this resistance point here, high and low in there. I think this is on the way, although it's underway, and you may well be already positioned in it. Gap is widening here on the MACD, and the RSI is powering ahead here. I think I will draw in a trend line here now because it's very clearly making this gentle move upwards, and I want it to stay above that as my guidance that we are moving up. So maybe a little bit overextended slightly at the moment, but I think this one is got more to go, and that if it is a reverse head and shoulders, which it looks like it is, then we've put in an intermediate term bottom, an important bottom for WTI crude. And finally, gold, which has been a big disappointment, but since it broke through the $2,000 level, it's eased back now. The latest crossover of the MACD was here, and it's still coming down, pressed by this downtrend line and the resistance levels to various highs. The spike high we had up here at 2127. It should now, I hope, find support at the break at the $2,000 level. We've seen the very first sort of signs possibly of a narrowing of the MACD, and also, as I take this off, the RSI has come from being bearish to neutral, but these are very early signs. Could possibly come further below the $2,000 level down to 1979. But I think that the next sort of moves for this is down a little bit further and then stabilizing and then returning upwards. But it's been a disappointing market, that is for sure. I'm going to leave it there for the moment, and I wish you the very best. I hope you found this helpful. This is Trevor Neil of RRG Research. I wish you the very best, and may the trend be with you. Goodbye.